As the Federal Reserve raised interest rates again this week, discussions about the possibility of a recession have resurfaced. Inflation is still high while the economy is slowing down, and many economic experts are forecasting a recession in the near future. But what does investing legend Warren Buffett think about this, and how should it affect your investment decisions? Buffett takes a pragmatic approach to forecasts of a coming recession. He doesn't like expert near-term forecasts and even calls them worse than useless. Buffett's philosophy on investing involves managing a company's operations and finances to achieve an acceptable result over time and preserve the company's staying power when financial panics or severe worldwide recessions occur. Successful investing involves considering the inevitable bumps and crafting a long-term strategy that generates wealth over time. While Buffett used the phrase worse than useless to describe near-term economic and market forecasts, he is clear on what he thinks about the market's long-term prospects. He believes in the power and creativity of the American people and calls it the American tailwind. He is a big believer in the market's long-term success regardless of the bumps along the way. Buffett stresses that he is not a stock picker but a business picker, and he believes that when you invest in great companies, the short-term projections don't matter for the long haul. Buffett claims ignorance about whether a recession is coming, but he states that recessions happen. He recommends that it makes the most sense for most investors to invest in an index fund and move on with their life. Part of setting up your investments with the inevitable recessions and other economic impacts in mind is taking advantage of short-term market conditions to further your long-term goals. Even though he has said his favorite holding period is forever, he sells stocks when he or his money managers determine a better use of funds. In summary, while the possibility of a recession may cause concern for some investors, Buffett's approach is to focus on a long-term strategy and not to let near-term forecasts distract from the bigger picture. He emphasizes investing in great companies and taking advantage of short-term market conditions to further your long-term goals. His philosophy encourages investors to look beyond the immediate horizon and focus on the bigger picture.